So with that, let's jump right into it. So I thought we'd start with a quick warm-up question. So for those of you on the line who registered for today's webinar, we asked you a quick question about your outlook for October on the dollar-yen. We asked you, you're short, you're long, you want to hold. And what you see here is the year-to-date chart for the dollar-yen for 2009. And then we'll give you the panelists' answers. And I have protected the names, or hidden the names to protect the innocent, where one is looking at it's going short, and two, it's going to go long. Then we looked at what all of you on the line had responded, and we had about 40% of people saying that they thought the dollar-yen would go short, about 28% long, and about 33% sideways. Interesting. And then we looked at what our own currency community was doing. And what's interesting here is that 63% of the currency community, and this data was a snapshot as of probably about 30 minutes ago, about 63% of our community is long and 37% are short. And it starts to give a view into this whole idea of volume. And the majority thought that it was going up when the reality is that it's going down. So at a glance on currency, you can see what your peer group is doing. And it's really interesting as you look at, we have a group of experts with us today. We have all of you on the line who have probably a very wide variety of Forex expertise, and then our own community. And it really leads to the question, we see different views on this pair from the experts, from the community, from all of you. And how seriously should we be taking these sentiment indicators? And let's start with you, Jamie. Are the crowds really all that wise? How do you take these sentiment indicators?
I think it depends on the crowd, to be perfectly honest. I think if you look at the COT data over time, the sentiment traders data from the IMM, those tend to be professional traders, and they tend to get it right. When the positions are large in one direction, that usually means we're in the midst of a strong trend. Doesn't mean things are always going to continue in that direction. And ultimately, when markets become too crowded, they oftentimes stall or reverse. The one sentiment indicator that I have seen over the years, or several sentiment indicators that I've seen over the years, that tend to be more wrong than right, tend to be the retail traders, the smaller trader, whether that be in equities, whether that be in foreign exchange. Oftentimes, the smaller traders tend to buck trends rather than follow trends. I think that's probably one of the more common mistakes that we definitely see in the trading world. Essentially, when we have, we're now coming off a strong trend. We've been in the last month or 6 weeks in the midst of a very strong dollar downtrend. I think we will have found, looking at the currency data, though I haven't been privy to it, I would suspect that most retail traders spot the trend on the way up and perhaps might be making some money during this replacement period right now. I think other surveys would show similar results. So I think it depends on who's being asked the question. I think if you just look at crowds in general, it's difficult to say. But if it is a crowd of professional traders as opposed to a crowd of retail traders, I tend to side with the pros because they tend to have a more established methodology, trend followers, or some other methodology that contain trends and trades, as opposed to the retail traders who tend to try and fade trends and then catch quick turnarounds.
Right.
Earlier today, I likened it to, $0 took the escalator up and it's been taking the elevator lower. People have been pushing the down button on the elevator probably for the last month, so have missed a good portion of the run. But it always eventually pops. So, if you catch that, it feels good, but sometimes it can be a little rough along the way.
That's a great analogy. All right, Boris, how about you? What do you make of all this in the crowds? Do you see them as all that wise?
I'm generally very with indicators for the most part. When we were at FXCM, we had access probably to the single largest retail sentiment database in the world, And what you find basically is that retail tends to be wrong in trend and right in range. So sentiment is only valuable if you can figure out the actual movement of the price value most of the time. I do think sentiment does have some merit at extremes. So, for example, last week or about a week and a half ago, when the long euro positions in the COT were really reaching 52-week highs, that was clearly a warning sign that the pair was topping out, and it clearly did at 143, 48.50. But topping out is just a small pause. It doesn't necessarily mean a complete turn in a trade, because euro could retrace now to 144 and re-rally back up to the highs and take out 150 as it works off all that overbought sentiment. So I do think it has some merit on a short-term basis. The one thing that Kathy and I kind of actually like to look at, sentiment indicator that tends to be right, or excuse me, wrong almost all the time, is what we call the popular press indicator. For example, the moment the picture of a dollar hits the cover of The Economist or Newsweek with a headline, "Will the dollar survive?" you can almost be sure to back up the truck and buy the dollar at that point, because that'll probably be the bottom for that cycle. But it's only at those points of frenzy that I think sentiment is of really any kind of merit to analysis.
And how about you, Shaun? How do you look at this?
Two ways, really. I agree with what Boris said about newspaper headlines, etc. That's definitely true. There's two ways for me, really. I'd be very interested in knowing what sentiment was immediately after a news event. So there was a very good example where the Bank of England governor was fairly dovish in what he said, and the market immediately sold off on that. And I'd like to have some way of seeing sentiment to see exactly how many people were really going short on that point. I mean, since that, we've dropped over 500 points against the dollar in just 2 or 3 trading sessions. So I think short-term sentiment around news events, I think, is very useful. In terms of is the crowd wise, I think on a strategic basis, it tends to be true that it is. Currently, the currencies that are doing the best are really the Australian dollar and the New Zealand dollar. One is getting benefit from commodities. They're both getting benefit from having relatively high interest rates in the Western world. And then the New Zealand dollar is getting benefit from the fact that its domestic economy is actually doing relatively well. And so we're getting these consistent flows into the Aussie and Kiwi, and they're trending for an extended period of time. You also have things like carry trades, where sentiment is going with that as well. One very big word of warning there, when we looked at the financial troubles that there was last year, the highest yielding currencies, i.e. the Australian dollar and the Kiwi, were actually the #1 losers. So logic said that they had the highest interest rates, so they should be well bid. But as soon as there's any real economic problems, then those currencies got slammed. So you mustn't get caught stuck in a mantra that that's the only thing that can ever happen. You must have some sort of way of getting out of your position if it's going against you.
That's great. And what I'd like to do is at our next webinar to look back and see how these different predictions fared. You know, we looked at what you all said in the community and everyone on the phone. I'd love to kind of do a compare and contrast and see how we did. So everyone can look forward to that in our November session.